Yeah, I can't. No complaints here.
Well, okay, so we wanted to just hit some sort of broader topics, since it's been a while since we've talked, and there's a lot that has been going on with Phoenix and in crypto in general, right?
Yep.
And I wanted to start with the Bcash distribution, right? So I presume you saw what Eamon Gurr, the Cornell professor, what he wrote about it.
Yep.
And he obviously got a lot wrong there, right? But to say a little bit about, whether this methodology used to do to not have the shorts actually be liable for the Bcash and to not credit the longs with their commiserate amounts. Is there some, is this?
Look, I'll offer some commentary here.
Okay. Yeah.
So, look, I think that this situation was kind of an awkward and unique situation. The most important thing to realize is that we, along with other exchanges, were kind of forced to figure out what to do about this a week before the event, and that is and that kind of forced our hand in terms of what decision to make. I as a capital markets person, I will tell you that certainly the correct way for these things to be handled is probably the way Kraken did it, which is shorts pay, margin longs get it, wallet balances get it, borrowers get it. But we were just constrained. We couldn't actually, we didn't really have enough time. We felt we did not have enough time to be able to implement that strategy for several reasons. We weren't sure if we were going to list the token, so that basically takes off the table the idea of pushing shorts into people's accounts, because you can't give a negative balance to somebody if you're not committing to listing the token. We were uncommitted to that, to listing the token. So that, and separately, it's not just people who are short Bitcoin USD, but there are people who are long things like FBTC or what have you, that would be adversely impacted by that. And in our market, it's a P2P market, and it's a very, very large lending market, much larger than Polo or Kraken's. And Kraken, it's not peer-to-peer; it's they're lending their own money. So we just felt like it was too big of a risk to basically push shorts into people's accounts. Even if we did list the token immediately, we just felt that there could be the possibility of triggering all kinds of margin calls left and right because of bad price discovery for the BCH token and what have you. So
yeah, the price.
Go ahead.
The price was up to like 20% of Bitcoin's value. So if you're pushing that a liability on people of that amount and they are leveraged, it could really push them straight into a liquidation, and then that stresses the order book and causes all kinds of problems. Yeah.
Right. And it could have not just stressed the Bitcoin order book, but it would have stressed like the Ethereum order book, because we have big positions on, say, FBTC, for example, or LTC BTC or ETC BTC.
Right.
So that's a big factor that I think a lot of people don't really think about. It's not just the people who are short; it's about the people who are long other crypto pairs against Bitcoin.
Okay, but with respect to this issue of time, you said that the time was a factor. I mean, as of this discussion now, Polo, GDEX, BitMEX, they have not still credited it, right? So you could have conceivably waited even longer to set up the market, get a proper market set for it, at the same time as crediting this, just in a similar way that Kraken did it, right? And as you admitted, Kraken did it the proper way. And so do you think you could have waited a little bit more?
I think there's a lot of risk in what Kraken did. Okay, and Kraken's margin market is not is very small compared to ours. I think that if they had to do damage control, it would have been relatively limited. For us, if this thing spun out of control, we could have just destroyed in the entire market, or taken very, very heavy losses ourselves, as we have customers go into negative equity or what have you. And we just weren't willing to risk that ourselves or on behalf of our shareholders. It was just, it was too big a risk. I think that there are ways to do this type of thing, and I'm happy to discuss that in a little bit, like prospectively, how should these types of things be handled? Because I'm pretty sure this is not going to be the last time somebody's going to try doing a
Exactly.
spin-off of Bitcoin, right? So, um, but yeah, we did not have a lot of time. We felt like we had to do something because if we told, what we don't want to have happen is tell people though, we could have said, look, we're not going to distribute Bcash. We could have done that, and then we would just have everybody withdrawing their money, no lenders drying up and what have you. So it would basically, I mean, that would have had an adverse impact to the market as well, right? So if lenders start pulling their money out and nobody wants to lend, it's a problem for a margin market, right? So um, so it was basically a series of bad choices. There was no good choice for us. Doing the way Kraken did, we felt just had way too much risk, based upon the fact that we really had very little time to prepare. So that's it was a risk management decision at the end of the day.
So the guys who would be upset are the ones who are long, margin long, and the ones who had BTC and got credited less than 1-to-1, right? So have you gotten any like fierce complaints about this? Anyone who's trying to pursue any kind of action to get there?
No one. Okay. There are a lot of armchair lawyers on Reddit, but I can promise you that we haven't received any kind of demand, legal demand of any kind, and I doubt that we will. I mean, I should point out that we did warn people that this was a possibility. So I guess there are we have some people who are upset who just didn't read the announcement, or didn't understand the announcement that we put up beforehand. So yes, there's some people that are miffed about that, but I don't know what to say about that. That we said we were doing this. I think more the thing that we're getting more pushback on is the fact that we denied claims for about 10,000 BTC. Based on what we consider to be kind of manipulative practices.
Could you expand a bit more on that? Because you did sanction a number of, maybe I don't know how if it was a number of traders, but it's certainly a sizable sum of what we have been as traders calling 1x hedge shorters on Phoenix. So can you tell us a little bit more about the process that you had to reach this decision?
Well, what we began to see clearly was that there was effectively in the situation that we set up, which is basically trying to find a scenario where all we did was distribute a positive balance, right? We didn't want to distribute negative balances, but we had to figure out how we were going to distribute positive balances, and and the only way to do that unless we accounted for the difference in longs and shorts. So why we came up with this idea of the coefficient, which I agree, not a perfect solution. We certainly even admit that in the announcement. But what we saw happening over time is that people were, I guess, finding the loophole. They were basically trying to get access to BCH with no exposure to BTC, and that goes against the spirit of what the arrangement, what we were trying to do. We also felt that that was a manipulative tactic, and that, and in fact, if anything, that was an abusive tactic that was basically taking money from other users on the platform that had more of a legitimate claim to it, right? If you're long BTC and you've got exposure to the price volatility of BTC, then you should get access to BCH. Instead, people were admittedly clever people figured, oh, I could go long on spot, and I can lend to my own short, and I don't have to pay, because lending fees were very high, right?
Yeah.
So one could make the argument like, well, they were paying to be in that position, but actually the vast majority of people weren't. They were actually self-funding their own short,
right?
And we just felt that was we had to disallow those.
So for clarity. For clarity, are you still making this practice of self-funding and doing what we call 1x hedge shorts? Is this still permitted on the platform in general?
I think that depends on what the purpose is. You know, the only time you would ever the only time it ever makes sense to self-fund a short, okay, frankly, is there's two scenarios. One is that you like using the margin trading because it gives you cost basis, and that's a good way for you to keep track of your cost base if you're trading around a position. So that's, I can understand that argument. But the other solution is the other reason why somebody might self-fund a short in a legitimate context, where somebody is in a big winner and they've been peeling off their position, and now they have so much P&L and they have a negative cost basis, so then that becomes self-funded basically by its own P&L. Or you know, somebody's got a winner, or not a winner, they're just in a margin position. They manage to bring in collateral of the correct type. They put it into the margin position. They keep the margin position open because there's a claim. The cost to claim is 20 basis points. So they don't want to close it until they actually want to close the position. I can understand all those legitimate purposes, okay? And those occur, and they occur spuriously. But the other problem here, too, is that a lot of people are wash trading to themselves as well. That is also concerning. We never want to see that happen. And the difference here is that there was all of a sudden a non-trading related incentive to do this, which was the distribution of BCH. Because without BCH, it would never make sense to put on to wash trade, right? And especially when it costs you money.
So as a matter of policy, it seems like Finex would still permit it, but on a case-by-case basis would essentially determine whether or not there's any kind of manipulative practices that require sanction.
I'm not going to acknowledge that statement the way you say it per se, but I would just say that, look, under the terms of service, we reserve the right, you know, to sanction people for practices that we deem manipulative, abusive, or to cause harm to other users. And we felt that that's what was happening here. Harm was being caused to other users who would otherwise have gotten more BCH, and against the people that were getting BCH with no exposure to BTC. That was really at the heart of it. It was a question of fairness. Now, I understand that people would say, well, the rules were, you know, the system worked the way it did, and changing the rules at the last minute was unfair. And I understand that there's a fairness argument there as well. But here we're talking about what's equitable. What's equitable for our users? What's so equitable for the people who were long? You know, what is equitable for the people that had BTC in their accounts and they were on vacation? They weren't even paying attention to any of this. What's equitable for them?
And how? Sorry, complete your thought. Sorry.
No, and that was the real driving force for us. What we wanted to do, the whole purpose behind everything that we did here, was to try to come up with the fairest way to deal with the situation, having to shove negative balances into people's accounts. That was it.
Okay, but how?
And we tried to come up with and we recognized after the fact, you know, as we came into the event, that people were gaming the system. And we felt that we had to take action, and we did it in a very specific context, not penalize anybody that had a hedged position on before the announcement. You know, we only penalized them to the extent to which those hedged positions were increased in notional size. It was not a decision we took lightly, but again, it was really you know, our goal was to protect the people who were naturally long and people who were lending. You know, we wanted to protect them in this event that was foisted upon us with 7 days notice to have to deal with it.
Yeah. And how can you remind everybody how this situation differed from the Ethereum and the Ethereum Classic situation, where there was also you know, people could have shorted and longed Ethereum and been on the hook for the Classic? Like, how did that differ?
I mean, that differed because we were, you know, the hard fork happened, and it was the desire for people to trade ETC didn't really. We knew we had to preserve people's ETC, but the fact that people wanted to trade it and that this was like going to be a thing was a surprise to us. And it happened after the fork happened, which is why, by the way, ETH, why the fork has ETH, right? If this fork happened and it was contentious at the time, and we're like, fuck, we're gonna have to list both of these things, then the fork chain probably would have probably had some other ticker symbol, right?
Yeah.
But because there was a discontinuity there, BTC just didn't trade for several days. Polo listed it first. Well, I don't know what to say. I mean, that was a different situation. But again, once we discovered that we had to do something about this, we couldn't shove shorts into people's accounts.
No.
And there we had situations where people may have been packed up and gone and left, right? I mean, if we didn't do it continuously, there could have been people who were short, covered their short, took their money out of the system, and what are we going to do now? They got zero balance, and now we're going to shove a short that's trading at a meaningful percentage of Ethereum.
Yeah.
So again, it's another one of those things where it's a very difficult thing to do, unless you really have really good systems in place to handle this. So
there was actually a really good article in Bloomberg. I'm not sure if you read it, by Matt Levine.
Yes, I saw it.
Very good article. Well, they used a legacy finance example where they had to basically try to claw back a revalued dividend from the shorts, and they had brokers that were on the hook, and it's really interesting. So I encourage everybody to read that.
Yeah.
So along the lines of these manipulative practices, I don't know if you've seen this. I'm going to call him a clown. This guy who spreads a lot of FUD and stupidity about both Bitfinex and Poloniex and others, who has been talking about this issue of spoofing. I don't want to go into.
Yeah, I read that.
Well, I don't want to go into his ridiculous claim about a large entity and all that stuff. But let's talk about spoofing in general, and what Bitfinex, how Bitfinex, as a matter of policy, considers spoofing, and what degree it has to be for it to be abusive enough that you sanction it to the degree that you did for this other case.
So, what I can say is that I've always, I'll say personally, I'm just going to make this point that in my prior life, I owned and operated multiple broker dealers, trading equities, and did a lot of proprietary trading. Ran prop trading, built systems for risk management, but also I built systems to look for manipulative trading practices as per our requirements as membership in FINRA. Now, I will say that certain practices are very clear, right? Like wash trading is pretty clear and identifiable. It becomes harder to identify when it's like a three-party arrangement where they're trading amongst themselves and trying to hide it and what have you. There are other things like marking the close. And there are ways to address people that have very high cancellation to order ratios, right? Like, what's up with those guys, right? But a lot of them are just people enveloping the market, doing through a trading bot, and the whole strategy has a very low execution rate in general. Okay, I understand. And then there are the people that are, in fact, trying to push the market one way or the other by flashing orders, when in fact they're actually trying to do something else. I can say that the type of activity that was referred to in that article, of course we know who does it. It's not any one person. I'd like to point out there are several people that do this, but I can tell you that in all cases these are people that are in fact big traders and actually traded that type of size. And a lot of times these are guys who either put them up, let people see them, but a lot of times they put that stuff up as hidden. And that's why we have a lot of hidden liquidity gets executed on the platform. And that's why the price gets somewhere and just stops there until people churn through 1,000 Bitcoins or whatever. It happens. But those orders are up there and they're bona fide. If you want to trade against those, anyone who wants to come in and trade against them, they can. So I've always felt that I always felt that spoofing, the anti-spoofing rules, in the U.S. equity markets, for example, I've always felt they were never, the definitions are very vague, and the tests are very are not very specific, and moreover, philosophically I think it's kind of off base anyway. I think spoofing is Sure. I mean, I will say that spoofing slash layering, it's, the non-bona fide practice there it's really hard to define. But as I like to say, it's kind of like, it's like pornography. It's hard to define, but when you know it when you see it.
Right.
And we don't believe that that's going on our platform. The extent to which we have seen activity like that in the past, we've put a stop to it.
Okay, so in the past you have detected and sanctioned it, but this is not something in the recent events in the past couple of weeks that you have had to do.
No.
Okay.
I mean, there's a lot of money sloshing around at our exchange and other exchanges. Okay. There are a lot of people that like to, it's, are there people that, could their motives be they want to push the price up by showing that could be, but it's hard to look into the mind of somebody. The fact is, they put up in the order is there. It's, and anybody wants to sell to that or buy to that, they can. And it's not like there's something shady going on where you try to hit it and it disappears, or where there's
cough Bitfinex.
It's that, well, I will tell you, nothing like that has ever happened at Bitfinex, ever. The order book is a sacrosanct thing. Everything gets processed, and the order gets processed, in the order in which things go in, rather. A single person or entity that's ever had special access to the order book. There's no co-location anywhere. No one has an unfair advantage. There's no, there's no one who gets to look at the order before it goes to the book, or any of these other shady practices that used to exist, and things like that in U.S. equity markets, for example.
Okay, so let's move on from this topic and talk about the Bitcoin development. And we're getting SegWit here this month, and that's partly why so many of us are so bullish and why prices are hitting all-time highs. But there is perhaps a headwind here later this calendar year, because SegWit 2x, as the New York agreement outlines, is supposed to have a 2 megabyte hard fork. But now that we have SegWit, and now that this Bcash has been created for the big block people, this doesn't seem like Bitcoin users are going to support this. It could be, however, that the miners end up going through with the 2 megabyte hard fork anyway. What preparations in terms of policy regarding this credit scene and all this, these network issues, what policy does Bitfinex have planned for this?
We're working on that. I think that in light of what happened with Bcash and and the difficulties surrounding distribution and what happened, look, I think that if they go through we do this hard fork, there will be another chain split, is my guess. And we're gonna try to be more prepared for that one than we were for Bcash, I guess.
And how do you assess the risk of this? What's your feeling about this?
I don't know. I think about it, and then my head gets all twisted when I think about it, because at the end of the day, it just seems. I think this whole Bcash thing has really kind of put a
why should
put a damper on people crying for this?
Yeah, exactly. Because why? Well, it puts a damper on them crying for it, but it also, for those of us who are supporting just SegWit, it's like, why do we need to do a hard fork? You big block guys already have your other chain, and so it makes the likelihood that Bitcoin users will support this even less, right?
Yeah, that's my gut feeling. Yes.
And so, even though the New York agreement outlines that it's supposed to be a 2 megabyte hard fork, I don't want to provide my own commentary on this, but I don't think it's going to necessarily get there. But are you supportive of the 2 megabyte hard fork, or do you think that things should just be let lie how they are now?
Let me be very clear. Bitfinex does not take a position on this at all. Okay, so we want to remain neutral in this, and there are people on our team that feel one way, the other way. I mean, but I would say personally, Phil Potter speaking here, I think that I'm not opposed to the idea of some type of protocol upgrade at some point in the form of a hard fork. I would just like to do more than just simply a 2 megabyte bump. I mean, it seems to me a lot of headache and hassles and trials and tribulations, hard fork, and all we're doing is bumping at 2 megabytes. There's so many other things that core devs would like to fix. if they had the luxury of a planned hard fork. That's how I would want to do things. So yeah, I think that any type of hard fork in November or whenever, it seems it seems, especially now, that there's been a much more, shall we say, anecdotal evidence surrounding kind of this sort of mempool spamming has been going on. I mean, there's the Bitcoin network is working just fine when it's not being spammed by ne'er-do-wells, and
Right.
that's always been my core belief. But I'm not a small blocker per se. I do think that we're going to need to do things to kind of increase capacity. At the same time, I think layer 2 solutions are really where it's really going to be, right? Lightning
Yeah.
and side chains and things like that. That's really where the scalability is going to come down the road.
And does Phoenix have any specific plans to utilize Sacred? Once by the end of the month, we're going to have Sacred active. Any
Well,
plans for utilizing it?
we are working with Lightning Labs to implement Lightning on Litecoin. So to at least get that going. So that's certainly something that's being worked on in the background. But we will, and in Lightning Labs, I think they've got the most credible implementation already. So they'll be doing it for Bitcoin too. So I mean, we will. My guess is that we will be one of the first out there with supporting Lightning.
Okay, great. That sounds exciting. So let's talk now. It's been about a year since Bitfinex got hacked and had this devastating loss. But you guys have done a wonderful job recovering and filling this hole for the shareholders. And at the time around the hack, you had stated that there was an audit that would be produced, and we haven't seen anything public, and we haven't really heard any updates.
Right. Let me give you an update. So we've engaged Friedman LLP in New York City to do the audit. They are doing a balance sheet audit as of June 30th. They are working on it. It will take time.
Okay, and so the audit of the financials is one thing, but regarding the hack and the giving us some kind of post-mortem or some kind of detailed, I mean, we still don't know how the hack happened, right? You haven't made public any of these details about the risks that went into it. I mean, do you have...
A statement is forthcoming. It's actually something that Chris Ellis has been working on, and it's in process.
But with respect, Phil, you've said it's been forthcoming for the better part of the year. When can we expect?
With respect, it is an ongoing investigation, and it's not something where we could just write some stuff and throw it out there. It involves lawyers and other people, and it's an ongoing investigation. So I don't really,
No ETA?
No. I think we were hoping to have a statement out before the 1-year anniversary, and
Right.
that slipped. And but the best person to ask about that, the person who's on the driver's seat on that report is Chris. We brought him in from the outside to be that guy. So
But okay, yeah, that's fair enough. So let's shift then to a related issue of the US dollar flows, because part of the reason why you engaged Friedman LLP to audit the financial statements, not related to the hack, but the financials and everything, this was part of this was to help improve the banking relationship. So how are the USD flows right now?
I mean, not really. I mean, the purpose of doing the audit is that we promise that to our new shareholders. So and we do think that longer term, having audited financials in general will improve our ability to get access to banking, but maybe not.
Okay, so well, regardless, update us on how the USD flows are, how your banking relationships are, how are the flows doing for customers large and small?
So we have solutions and have had solutions for some time for large corporate customers. So there's a reason why there's not much of a gap between us and other exchanges. There are entities that are able to do the arbitrage effectively. That's that.
So
but for retail people, it is still a challenge for us for banking.
Okay, and is there any prospect, like at what point will this flow be frictionless and the retail, smaller and larger, will have access to these flows?
I'm not sure that we are interested in pursuing that business line. I mean, it is a matter of some debate internally. When we look at um, this, I mean, we honestly, it's the cost and headaches of supporting uh, banking for retail customers, um, both in the United States and around the world, frankly. But in the United States, this is particularly challenging. Is it's not clear to us that that's the segment that we want to be in.
Can you
So,
help us to better understand exactly why it is that because what's the minimum that these big guys have to have in order to have these flows, and why is it that they can have this access but the smaller ones can't? Can you help us understand better those who are so?
well, it has to do with our banking partners. So, in order for our banks prefer to deal with corporate customers in general. So that's certainly one thing. And then secondly, it's much easier to understand the texture of for a bank to understand the texture of its client's business dealing with fewer flows, right? If we're getting 50 wires a day from you know everybody and sending out 50 wires or 100 wires a day or whatever, banks get nervous, in general. And it's much better for us to have fewer flows, larger flows, on a regular basis. It's much easier to document. It's much easier to do the KYC. Much easier to get them comfortable from an AML perspective. It's just less headaches and hassles for everybody. We think that the last mile. See, here's the thing. Bitfinex is we're positioned kind of as a global provider of liquidity. In fact, we think of ourselves as kind of a wholesale provider of liquidity in a way. There are many regional exchanges that use our liquidity and reflect it via their FX translation, and they reflect our book for their local. That's a very common type of relationship we have with a number of customers, and we're basically fine with having other exchanges handle the last mile problem for retail customers. We just don't see that as really a market that's really worth struggling for, because it's one that requires you have to make a very big investment in infrastructure, in licensing, jurisdictional presence to make that stuff work.
Right. Okay, so regarding products and features on the platform, you've talked, many months ago when we last talked, you were mentioning about deliverable options. You were talking about reforming the lending books and such. But instead of seeing like features like this updated, we've seen ICO coins added, like OMG and the EOTA, EOS, this kind of stuff. What's the deal with this priority shift from improving platform features to adding altcoins instead?
So we've been working. So yeah, I'm a big proponent of trying to get the options done, and unfortunately, that's had to take a backseat to other things. I mean, so I don't think anyone really anticipated this massive bull run, and the volumes that we're doing now are, I mean, frankly, mind-boggling. But as a result, it puts a lot of stress on our systems. So we've been focusing on scaling. I like to, I think that we have the best operating matching engine out there, hands down. I mean, everybody complains about, all the other exchanges kind of going down or becoming unavailable during times of volatility. I think Bitfinex has been rock solid.
And that's
many months.
And that's a major change from a couple of years ago, right? Because it used to be a
Well,
similar.
That's right.
Right. I mean,
I
no,
would say
I'm giving
in
you
August
credibility.
of 2015, right? We had all kinds of problems.
Absolutely, yeah.
And so 2 years later, we're in a much better situation. But you see, we did a lot of engineering back then, so we are in some ways ready for this bull run.
Right.
But I will say that we are not. That's not sufficient for us. So we are engineering for the next leg, and so that's taken a lot of effort. There's a lot of there's a lot of stuff kind of under the hood that's being done that may not seem very glamorous to anyone, but it's about making our system more modular, more easy to support, more easy to run. We've added a lot of developers to the team. That itself is in the short term a big productivity hit as you try to get other new developers up to speed. So yeah, and
Okay.
then also and then the business priorities have changed as well. So aside from the engineering side, we have had to force have focus on other areas, but also it's hard for us to ignore this ICO boom. So
But
we
but you have but in the past, as a company before the hack, you ignored all kinds of altcoins, and there was
we did.
and what has since the hack this has changed, and now you're adding coins that don't even exist on other exchanges. And what exactly is driving this this phenomenon? Because it seems like an about face. Because back in the day, you were even hesitant to list Ethereum. And now suddenly, every coin on this side of the
Well,
planet.
I'll tell you. I mean, what we saw happening was that Bitcoin, as a percentage of total market cap of digital assets, was plummeting. So you know, we're in a kind of evolve or die market, right? So we're we're sitting here looking at Poloniex volumes and Bitrex's volume and other people. I'm like, okay, we need to get involved in these other assets, and I think that that's I mean that was definitely a big shift in our strategic thinking, but one I think that we're like I said, we're running a business for the benefit of our shareholders. We need to think about revenue. We need to think about market position, and also I think that we also have the ability to make a difference with some projects as well. So IOTA is one that we were involved in a long time. It's a project that we've been very interested in, one that we invested in a long time ago, and so we were the first to list it. And why? Because actually doing the walleting and all that stuff is a really enormous pain in the ass of the IOTA. It's still a very immature project. But since we've been involved with the project for a long time, we were able to get that done. And IOTA has been very successful for us. EOS is another project. We're investors in Block One. So
Okay,
we
but
had an interest in doing that. Omi's Go, we don't have an interest in Omi's Go or Sentiment, but those are two projects that we think are very interesting, and we think we wanted to give exposure to. So,
okay, but
and
don't you think?
we're getting good trading volume for it. So,
But to some extent, I mean, a good example is this Bcash situation. A couple of exchanges like Coinbase, BitMEX, and Poloniex, even up until recently, they took a sort of principled stance, because they believed that there was a responsibility for exchanges to set a line and say, okay, being a custodian of Bitcoin should not carry these kind of administrative liabilities, and we need to put our foot down and have some standards. And what do you say about this responsibility exchanges have to put a line somewhere for these kinds of things?
I think we discussed this pretty heavily internally, and I would say that I myself, personally speaking, again, a personal opinion, not a fan of supporting Bcash at all. I wish I could just say not supporting it, but there's a problem with that, and that is that for example, GDAX, both of them can say we're not supporting it, or if you want your BCH, withdraw your coins. That's because that's the only way you're going to get it. Of course, GDAX has changed their stance on that now, and my guess is that maybe at the end of the day, so will Bitstamp. But point is that they don't operate. GDAX has suspended their margin market, so they don't have a margin market anymore.
Okay.
And Bitstamp doesn't either. So it's just all cash positions. It doesn't matter to their whole marketplace. It doesn't matter to the marketplace if everybody withdraws their coins. Okay, they'll
Yeah.
have low volume for a few days, but it's different for us because we have such a huge lending market, and
Right.
people are in these margin positions, and it's if all of a sudden everyone has this huge incentive to withdraw their coins to get their split, to get their BCH split, because we're not willing to give it to them, people are going to be withdrawing a shit ton of coins. And then what happens when people need to renew their loans? And if they can't renew their loans, we're going to have to close their margin positions at the end of the day. And
Yeah.
that creates a whole set of other problems. So it is a very difficult tightrope to walk across. It is anyone that thinks that all this stuff like, oh, the Bitfinex is incompetent or this, that, they just don't know what the fuck they're talking about. Pardon my
Right.
French. They
Right.
they don't.
Right. But I mean, there still is. I mean, I'm going to challenge this idea that an exchange can even remain neutral in this kind of, because you said Bitfinex.
So my point is that the issue is that we don't want to take public positions on whether or not we support big blocks or small blocks or this fork or that fork, but
it's implicit,
I don't like the idea that anybody can come and basically fork away with replay protection, et cetera, et cetera. I mean, this is a pretty clean fork from that standpoint.
It ended
fork
up
away,
yeah.
and because of some marketing power, basically get everybody all hot and bothered about their free BCH. And then basically we had to support it because our customers demanded it. I mean, to take a principled stance is just not. So we don't really have the luxury of taking a principled stance when it comes to this type of thing, because
other exchanges
because of the margin market in the lending market. We basically kind of have to support these. If it's something that's kind of has some widespread support and apparently has some value. I mean, there was a futures market trading that suggested that this thing had at least 10% of Bitcoin's value, most of the time leading up to this, or more, 15%. It's you can't really ignore that for your customers.
Right. Okay. So in the related about these ICOs and stuff like that, very recently you guys announced an entirely new platform, right? EthFinex. ETHFinex. Could you tell us a bit about what the hell this is and what it is you're planning to do with it, and help us to understand what direction this is going, and if resources are being diverted from Bitfinex over to this Ethereum stuff now?
No, we've hired new resources to work on this. And it is the purpose here was to create a platform that really catered to and was really for the Ethereum development community, and people launching ICOs, and to find a place where we can have a much more neutral approach to trading and listing. So part of it is having a process to auto discover tokens. I mean, there are hundreds of tokens out there now, and we want a way, a relatively clean way for users to basically create order books for whatever, So that that in other words, kind of to decentralize the listing process in a way. So that's kind of one thing that we kind of wanted to do. We wanted to do it also kind of in a separate entity, away from Bitfinex, have an opportunity to kind of, and also create some community features, an ICO feature, a place where people can come and sort of, we can help them manage their ICO, from from offering professional services and other things potentially. That's another aspect of it. And then of course we want to experiment with other Ethereum-based technologies to help develop the exchange space. So we think that there's ways to do more sort of trustless exchange stuff. Using it specifically with Ethereum and Ethereum tokens, and we think that we can develop that to kind of act more as a sort of decentralized exchange platform. I don't think that total decentralization is going to be here anytime soon, but I think that we can reduce the amount of trust that people need to put in exchanges with respect to interacting with a central limit order book. So we're going to be experimenting with some technologies there. Yeah. So
okay. All right, so those who are shareholders in EthFinex as a result of the VFX token stuff, like full disclosure, I'm a shareholder as well. But is there expectation of is EthFinex under this company?
It's 90% owned, yes.
90% owned, okay. And there hasn't been an update recently about, that's a lot of questions about dividends, because obviously you guys are doing extremely well.
I have a shareholder letter that was been finalized on Friday. I'm just trying to get emails out to the direct shareholders, and then I presume that BFX Trust and Bank of the Future will communicate to their shareholders. So yes.
And what about
there's a substantial dividend coming for Q2. It will be distributed as soon as we can figure that out this month.
And you'll just do it over the platform, right? Because everybody is a account holder, so you distribute the dividend directly to the account on the platform, right?
We're still working that out, yes. But we have the money. It's earmarked. It's substantial.
Okay, and you also mentioned when we discussed this earlier this year that there might be a potential for a order book between existing shareholders to trade shares in BFX.
Yes, that's also coming. That's coming. I think we're launching the beta for that next week.
Beautiful. That's going to be really great.
That I would like to push in. Initially that's only going to be between direct shareholders, okay, of which there are not many, right? It's a small group of people. And non-US people, and we need to make sure all of that works the way we expect it to, and then we need to add some other features to the marketplace to make it so that we can potentially have our US shareholders interact with it, potentially, but also to allow like sort of a two-tier clearance approach. So we want to be able to have somebody from Bank to the Future to be able to trade their tokens away to other shareholders that may not be in Bank to the Future. And so there's some complicated sort of post-trade paperwork that has to occur, and so that's going to be happening in phase 2. That will probably be sometime this fall, but you will at least be able to see. There will at least be a market price, and that there will still be probably opportunities to sell your shares through Bank to the Future if you want to, but it'll just be manual,
Okay, and so if it wouldn't, there wouldn't be a margin trading for it; it'd just be spot, right, between. I presume.
It'll just be it'll be just yeah, it'll resemble a central limit order book initially. The thing that will likely be added in to kind of make it more palatable for the SEC and presumably other regulators would be something like well, one, it would be a private market, right? So only people that are already shareholders or people who are properly vetted can participate. Secondly, we'll likely add in kind of an IOI OTC element to it, so that people can post an indication of interest at a particular price, but it's not a binding bid or offer, and that's important for 34 Act issues in the US. So there's a lot of aspects of this that will have to evolve, so that we can we can create liquidity for holders, but do so in a way that's not going to create problems for us with the regulators.
Yeah, and you mentioned, speaking of regulators and the SEC, I presume you saw their notice regarding ICOs. They as Barry Silver said, has put them on notice, right? As anybody doing ICOs is now sort of at risk of SEC harassment. And in light of the EthFinex project, what is your comments on this risk and the future of ICOs in general?
Well, I think that again, this is another reason why dealing with U.S. customers is a pain in the ass. The SEC is difficult. They're a tough regulator, and we don't want to wrangle with these guys. So that I think that you'll see us and other exchanges, making some changes to how we service U.S. customers for these types of products.
So, I mean, the European regulators basically follow what the SEC does, right? So, what about the potential of this sort of spreading beyond the US and how that would affect exchange policy? Like, if it becomes a global phenomenon that covers 90% of the customers' residencies, could that be an issue?
Yeah, maybe. I mean, that could have a very chilling effect on anybody trying to raise money through an ICO. I mean, I think it's going to happen in two ways. I think there's going to be a process, but eventually the SEC and other regulators around the world are going to have to come to terms with the fact that that exchange technology is basically become decentralized because of the blockchain technology. The idea that we can move assets around without an intermediary means that this stuff, if you force people to go underground, they'll go underground, right? So the idea here would be to try to, and I think there are a lot of digital currency advocacy groups that are interacting with regulators to help them, take perhaps a lighter touch approach to trying to regulate. So I think that there may be. It's not that. I think that what will happen is that there'll be some blend of proscriptions against doing this stuff or light touch regulation, hopefully, that kind of like equity crowdfunding is legal in the US, but this is kind of a so I don't think that I don't think the regulators have a problem with people raising money. I think they have a problem with them raising money from people who are anonymous, right? So they don't know if they qualify as, say, an accredited investor. That's certainly a factor, and the fact that you can trade this stuff to other people that are not accredited investors. Yeah. I mean, the anonymity of the blockchain is I think is what's creating a lot of these problems. So if you're going to create securities and push them around anonymously on a blockchain, you're going to have a problem with regulators, and I understand why. And I think that issuers should have a problem with it too. And I think that this is the real central problem, if you asked me, is that people, all of a sudden, in a space of, say, 6 months or so, the traditional VC model of raise some seed financing, friends and family, and then get yours to do a safe note, and then go get your Series A and this, that, and the other, where you're raising maybe a few $100,000, then a couple of million, then maybe 5 to 10, and now you got projects coming out of the gates trying to raise $50 million plus, and so I think that there's, and they all they see is dollar signs, and they don't understand. They're not thinking like a company should be thinking about. They should care about who their shareholders are.
Yeah.
And that's what private companies know, who their shareholders. You don't want Kim Jong-un as your shareholder. You don't. But you know what? If you don't know who owns your shares, that's what's going to happen. That you have the potential for people in sanctioned countries, people that are on OFAC lists around the world, terrorists or other people you don't know who can own your securities.
Yeah. So speaking,
or it could be a competitor doing something. You never know.
Yeah. And speaking,
there are reasons. Go ahead.
Sorry. Yeah. But speaking about these shady characters and stuff, what about BTC-e? I don't know if you have any. I mean, I know you've some of us who have been around for many years in crypto have been sort of forced to trade on BTC back in the day. I mean, not so much in the past couple of years where there's more quality exchanges. So, what about them and what's going on with them? Do you have any sort of comments or concerns about that?
I mean, I don't know. I don't know. I mean, I'm not surprised. But I don't know. I will probably see BTC-e kind of come back to life. At least they seem to be promising that. Um, I don't know. But
But
laundering
you're not still trading with them or anything like that, right?
me? No, I mean I haven't traded with them since days Gox, you know.
Yeah,
So
I know. It's been a day when you have to send fiat to some shady intermediary and shit like that.
I mean it was, you know, it was what it was. But I mean I think that what I feel bad about a lot of people who are basically innocent people that are on that platform that have money tied up there. I hope they get their money back, you know, because there are a lot of people that trade on that platform who are not money launderers, you know, who are not criminals, who are not drug lords or terrorists. And in fact, I think that's the vast majority of the people that would use that platform are none of those things. So I don't know. We'll see how that pans out.
All right, and I'm the prepared topics I had I'm more or less finished with, but there was a user who just messaged me with a good question about this BCU split tokens that you guys have. I mean, part of the reason why you had to list Bcash as BCH is because you already have BCC as a symbol on your platform for Bitcoin Core, and the corresponding split of BCU, Bitcoin Unlimited. And there's the question is whether or not this BCU will resolve to, now that Bcash is split, if this will somehow resolve to that, or what exactly is the relationship between these?
Okay, so we're still examining this very carefully internally, and we are also aware of pull requests being made on the Bitcoin Unlimited project to make it compatible with Bcash. So if that happens, if the repository contains code that if you run it, you'll be on a different chain, then we will resolve BCU to BCH. We have the BCH for these tokens, right? So we're still trying to figure out what we're supposed to do with them. So that's something we'll hopefully resolve within the next week and understand that. But yes, there's the possibility that BCU resolves to BCH.
Okay.
Yeah.
All right. Well, I'm going to open it up now to everybody else. If anybody has any questions, I'm going to now give talk power to everybody, and in an orderly fashion, they can then ask if there's something I missed or if there's something else of interest. Now is the time.
I want to apologize in advance. By the way, there's a ton of stuff going through on the chat window here. I've not been really reading it.
No, that's not. You shouldn't either. You shouldn't. I'm going to open on the mic. They can do that, or if there's an interesting enough text one. One sec.
Cool.
Will Bitcoin reach 10K?
If nobody else has got something to ask, basically with the one-to-one trading, the short hedging on Finex during the hard fork. Unfortunately, I was one that tried to do that, and yeah, it's basically the communication. I think in the future, maybe if because the only reason I did it is because there was quite a few other people doing it. So if Finex had actually said that no, you're not going to get anything, so don't do it, I totally wouldn't have done it. And yeah, it's tricky.
It is tricky. It is tricky. I'm sorry that you got caught up in that, but let me just also point out that there's kind of a flip side to this. Like, we sort of recognized this was happening, and it was, and we got to the last day, and we're like, shit, we're going to have to do something about this. We thought about making some type of announcement, but to be honest with you, we also felt that would actually then all people would do is just run to try to obfuscate what they're doing, so and exacerbate the problem in a way. So we just didn't have good options. We didn't have good options, and it's a we're dealing with a lesser of two evils or three evils or whatever in terms of trying to figure out what route to take. No solution. We would have been criticized for any choice that we made.
Yeah, I can understand that. Yep.
Hi Phil, Bobber here. I'm responsible for about 40% of the spam in the chat, but I just want to ask, look, yeah, 3K, are you excited? Are you happy? Are you like moon? Yeah, are you celebrating?
No, well, I mean, no, I'm not celebrating. I have to say that we've just all been so busy, kind of running the business and doing what we need to do. It's been hard to even take a step back and marvel at what's happened. I mean, it is pretty remarkable. I mean, looking at the price of 32.65 right now, plus if you add in the BCH, I mean, Christ, I mean, it's, we're nearing in on 3,500 between the two total. That's amazing. I personally am very, very pleased to see where a lot of these cryptos have gone. It's been very, it's been very exciting. I think we're very thankful to our users to continue to come and trade with us. I mean, our volumes have been very, very, very strong. I think my feeling is that if I had to guess about where Bitcoin was going, I'm thinking that in the short term it's going on. I think that 5,000 is in our sights in this year.
It's getting close to that. I'm a snitch. I'm a snitch. I'm a dirty snitch.
I would like to point out that we might moonshot up to that and then just plummet right back down, and that where we are here, I would not be surprised to see that we bounce back down to low 2000s, before we make any really significant breakup. But I think that I think the right strategy in my mind would be long, have a core position, and kind of trade around it. Buy it in on the dips and sell a bit of it on when it starts to break out, and just kind of rinse and repeat. Because I think that overall it's going up, and I think that we can see, I definitely see another 50% move in the cards here. So I think that's definitely going to happen.
Also, congrats on the baby, and good luck with that. Yeah.
Look, I think that Ethereum is also coming off the floor here. I think that Ethereum may have even greater potential on a percentage basis. I also think that other ones, I think IOTA is very interesting, guys. I think that I would keep an eye on that one too.
PGP, I would say IOTA is interesting as well if I would participate in the eco,
Are you saying wink wink PGP?
Not participate in the ICO. I mean, we bought at OTC many months ago. Our shareholders have benefited from that. But I don't know what to say. I mean, the reason why we bought into it, and the reason why we decided to work with them and to do a substantial amount of internal development so that we could actually list it in a timely fashion, is because we believe in the project. It is a fundamentally different type of blockchain. If it's still in its infancy, but it holds a lot of promise to solve a particular set of problems, and so I'm interested in that. I mean, it's a relatively small bet on a moonshot. You never know.
I mean, I know, it's very interesting projects. It's hard to disagree with that, but the distribution was very hard for some traders to swallow, right? Because they didn't even heard about this on the public.
Phil, earlier this year you talked about adding new fiat currencies, not only for deposits, withdrawals, maybe also new trading pairs, euros, etc. Where are you on that?
We actually have those in beta testing with a few customers. It's something that it's going to require more management focus, and we just have not been focused on it. We were initially when we were completely shut out of USD banking. We have USD banking now, but again, it's not for retail. Things seem to be working fine for now. So, I mean, we're interested in doing it. It requires more focus, which we have not been able to give to it.
Phil, what are your thoughts on LedgerX?
So they've been at this a long time. We'll see. You know, I mean, I have my own opinions about how this type of product should be set up and should work. We've been doing some investigative work ourselves in the regulated future space, but I think that I don't know. I mean, I think that there's a lot of challenges to making this type of thing work right. I'm not convinced that LedgerX necessarily has the right secret sauce here, nor will Gemini. And it's unclear how successful the CME's product will be when they come out. So we'll see.
So is there like multiple, like in the pipeline? You've got LedgerX, which I thought is kind of Bitcoin denominated. I kind of had in my head they would be having to buy, you know, basket loads of BTC from Finex, making us moonshot to, you know, provide the liquidity for people that want to trade this stuff. And then I'm thinking you've got this Winklevoss thing partnership going on. Am I wrong?
I mean, well, look, there are a lot of people trying to pursue this. You know, we'll see.
I got a question. If I can ask, is the liquid sidechain project going anywhere? Is it possible that in a foreseeable future we'll have multiple exchanges sharing the same order book, or is that completely crazy according to you?
I don't think it's completely crazy. I think that it's just going to it'll take time.
Yeah, because I had an idea about that as well. I imagined like through Lightning with BTC and Tether as USD, could all these exchanges become like completely instantaneously interlinked? Could arbitrage be like a race to like 0.1%, you know?
I mean, quite possibly. I mean, I think that if we could transform the blockchain into a kind of a decentralized DTCC type, you know, clearing facility in a way, then that type of thing becomes possible. I mean, where you could basically have a situation where you can route to the best exchange price because you can settle the trade on the blockchain at the time of the trade, and not on the blockchain, but via Lightning or through a sidechain. So yeah, so I think that these things are theoretically possible. It'll take time for these things to actually play out, but we're definitely involved in you know, in all of these types of discussions and trying to innovate. And so not only have we been involved with Blockstream and trying to develop the liquid sidechain and trying to figure out use cases there, but also certainly, you know, we've been very proactive with working with Lightning, and we're also you know, trying to find or develop other solutions via EthFinex as well. So you know, we're committed to evolving the state of clearance and settlement for coin trading, as well as you know, evolving the concept of a central limit order book to become more trustless.
And it just neutering out volatility, and kind of we become more stable, because anytime anybody tries to do a big order and all these other people try to FOMO, it's all just kind of you know, take advantage of this drop, and I just think it's going to like decrease volatility.
Oh, I don't think we'll have. I think that'll just be a different kind of volatility, because I think that if you had convergence of order books, in a sense, and convergence of order books is going to work, is that if you can solve banking, period. I mean, so banking is still a problem in general. Okay, so if you're domestic in the U.S., sure, you can get access to domestic exchanges pretty easily, but a lot of the liquidity, as you guys know, is not in the U.S. It's overseas, typically with us and other exchanges. So and dollar flows are a pain in the ass overseas. They just are. So if you had a solution where the banking was solved, I mean, like a tether-based solution is certainly one, obviously, that we would promote. Yeah, you'd be able to get these order books to all converge, and that somebody could basically send a smart order that would basically go to the best price and then settle immediately with that exchange via Tether or something like that. Then what would then happen is that if all liquidity aggregates, then you'll see much bigger players coming in, right? So you'll have a different kind of volatility, because you'll have people come in and who can actually seamlessly execute large quantities because the order books are essentially aggregated, and then you'll see structural volatility occurring.
Yeah.
T'as trouvé un PC?
Who is that?
Gibbous, I will mute. So Phil, do you have any thoughts about this new guy coming as a head of investment in CSE? And how would you see it will impact future possible acceptation on the ETFs of Bitcoin?
I think everything's on the table. I think it's quite possible that that we'll have some kind of review of past decisions. I think that the Bitcoin ETFs, at least the Winklevoss ETF, still suffers from a problem, which is that how do you get a reliable what do you call it, NAV, right? Certainly at the time there were pointed Chinese exchanges and manipulation, and there's lack of regulation. There's no regulator for Bitcoin exchanges. There's money transmission regulators, right? So those are the only licenses that have. No one actually has a license to operate a Bitcoin exchange per se, where there's some regulator overseeing the exchange operations. That doesn't exist anywhere. So in a sense, that's really one of the SEC's prime considerations, is that where are you really going to get the price from? I think that they have to kind of cross the Rubicon on that one. That's a big philosophical shift that they would have to make. I think it's possible. Kind of recognizing that Bitcoin is a global commodity. It's not. It's it's just something new and different, and and ETFs like this need to exist. I think it's possible. I'm not terribly hopeful that anything's going to change soon, but it might.
Not sure if you're aware, Phil, the Chicago Mercantile Exchange apparently signed a deal with the Winklevi to get their pricing data for some future.
No, that would be the CBOE, the CBOE futures exchange.
Yeah. Okay.
Yeah, and that is just, from what I understand, it's really just it's basically a data sharing agreement, and that they plan on trying to build something together, and then maybe for this fall. I don't see that as anything more than just kind of a optimistic presser, to be honest with you.
Phil, you're on the advisory board, aren't you, of the other effort to get a index put together, the one with the CME, right? So how's that going?
I've been asked to be an advisor on that. Yes. That's really just about being an advisor on index issues, right? Yeah. So I have a relationship with Timo. Timo developed that. I've given them a lot of input on how to do that and how to do it well, I think. And I think that there are a lot of other challenges with having with index-based solutions for futures. I want to be part of the solution and offer my I happen to have a lot of expertise in the topic of index creation from my past life. So what I can say is that it's a complicated thing. Bitcoin is one of these things that kind of defies easy index creation because of the underlying fundamentals of fiat money movements create these price variances. So
let me ask you then what your opinion is about what PayX and BitMEX did in terms of how they did their index, where they did not include the forked chain's value. What's your opinion on whether this is the proper way to value the index for open existing futures contracts?
Did not do what? I'm sorry.
They did not include Bcash value.
Oh, right. You know, that's their choice. I mean,
But is that proper, do you think?
I think that. I mean, the question is what's proper. Okay, if you ask me what's the proper way to handle the spinoff, I'll tell you the proper way to do it is, like I said, probably similar to what Kraken did, but that's not what we did.
No. I'm talking about for a futures index context.
But I understand. I understand what you're saying. I'm just saying that it's complicated. I don't think it's obvious to say, oh well, after this date, it's going to be a combination of these two. Maybe, but I'm not sure that that's the obvious play. And they could, and you know, and they reserve the right to make those choices and changes. I mean, I think it'll be harder to trade. I think that in their mind, if I was them, and you know, I don't know if Sam's been in here talking about it or not, but if I was them, I would say, I would imagine that it would confuse users, and it would make it, they would lose liquidity because people wouldn't know how to trade it. You know,
let me counter this, because we did see in the market a significant discount because precisely the fact that these exchanges had announced that they would not include this forked, but we could call it a dividend or a spin-off or whatever legacy analogy is to be used. Regardless, the fact is that there was value attached to the possession of the spot, right? So they're supposed to be coming like this. They're supposed to normally sum the value, like before when the Bitcoin Unlimited stuff was happening. The proposed policies of these exchanges was to sum the value. And now with the Bcash, they went against this, and I think all of
Bitcoin Unlimited and Bcash are basically two different situations, two different threats. Okay, and I'm glad you brought it up because I do want to say something about this. I think that there is, in my mind, okay, and I think that other people at Bitfinex feel the same way, that there is a difference between a contentious hard fork occurring on the network where there's no replay protection. You know, it's basically somebody basically fighting for what's Bitcoin. You know, like you know, really a protocol battle. All right, that is a different that's a different theater of war than a situation where somebody's doing a spin-off, which is effectively this thing had replay protection. It's basically it's somebody launching an altcoin and just using the UTXO set.
It's more like a
distribution mechanism.
It's like a dividend payout, basically.
Look, the Lumens did this. Okay, Clamcoin did this. You know, it's basically it's in a sense it's an airdrop. Okay, and I think that it feels more like a minority stock spinoff, or like a stock dividend of some kind, or you know, it feels more like that. And I think that. And that's because anyone can do this, okay? Anyone can go and fork the Bitcoin project on GitHub, change some parameters, put in a flag date, you know, change the mining algorithm, or retarget the difficulty or whatever, and then just launch a coin. Now, for example, there is actually somebody who's trying to launch something called Bcash, right? They're trying to actually basically do Zcash, but distribute it to Bitcoin holders.
Yeah, I saw that.
Right? So, okay, cool. All right. Now, and actually they want to use the moniker Bcash, by the way. Interestingly enough. Now, so the question is, what now? Are we going to support this guy? I don't know. I mean, it's really at some point, you know, anyone with enough marketing effort, dollars, if they can get into people's heads that there's free money, if your exchange supports this, then all they do is to go clamor to the exchanges saying, I want my, you know, I want my new spin-off coin. I just feel like we're going to see more of this, and so
yeah, and this is the argument that BitMEX Sam was making as well, right? He was saying that the administrative overhead of basically perpetually being responsible for providing all of these different airdrops and stuff is so cumbersome that that's why exchanges need to take some kind of stance and just stop the insanity.
I agree. But at the same time, it's complicated. Again, coming back to our situation, we could say that we're not going to support these things, and then if people get in their head that these things are going to be valuable because somebody sets up a bullshit exchange, trading futures in this thing, well, then people are just going to go withdraw all their coins so they can get and go to an exchange that will support it, and so there's a competitive issue here. Right, so on some level, do I want all my users to go to Kraken? No, so I had to do something, right? And I think that, but also at the same time, we have an issue where we need lenders, right? We don't want everybody to just disappear from the marketplace because we're not supporting some airdrop. That affects business, and that can affect the margin market and create price swings and stuff like that, and margin calls that would be unintended consequences of not supporting a coin. So I don't know what the right solution is, but I think that if we can come up with a generalized solution to deal with this in a more automated fashion, well, I can promise you that we're considering it internally. I mean, what do we do the next time around, and have a mechanism to deal with it. I think that one aspect of it probably needs to be, from our perspective, we need to have some price discovery on the platform itself. So kind of doing like a future for the token, just so that we have some idea what the price is, so that when we go to split event, that we're able to, users will know kind of what they have in store for them, in terms of potential margin calls or what have you. And one other solution is potentially to raise the margin requirements going into such events. I don't know. Everything's on the table, but we're cognizant of the fact that this will not be the last time somebody tries to pull shit like this.
Yep, and maybe even later this year with this Sega 2X, then you get more of a Bitcoin Unlimited type situation, right? Which I guess it's a little more clear, as you said. But this is just the nature of blockchain assets, is that you're going to have these kinds of technical.
That's right, and I'm wondering, I saw somebody else make this comment, so I won't attribute it. Don't attribute it to me, but somebody says, well, maybe this is why you should own Bitcoin, because Bitcoin itself may be just kind of like it's like basically you'll generate a portfolio of cryptos over time, and I thought about that, and well, if you're going to launch a coin, you're launching it. It's a very interesting marketing approach to giving. If you airdrop it, and everybody who has Bitcoin now is going to have some of this. That is some marketing move in and of itself. You're giving everybody something for free. It may not be worth very much, but everybody's going to have some. So you're going to you've just got all this free marketing, free advertising all of a sudden. Everybody will be talking about it on Reddit and Twitter and whatever, and so it's very clever. I mean, the problem with this is that any project that gets launched, needs some way of funding its ongoing development, right? They've got to have they have to have dedicated developers, working for free, essentially. Like essentially you do in Bitcoin, or you need to have some type of centralized funding mechanism like Bcash or Ethereum Foundation or whatever. So you need to come up with maybe, and then just kind of this thing where you just distribute to everybody who's got Bitcoin already, kind of sidesteps that, but doesn't. I just don't know how Bcash survives. I mean, who's working on Bcash, right?
No updates for 7 days on GitHub.
I don't know. I mean, I don't know.
They've already cashed out and brought down.
Yeah, fucking Bcash is over now. They've banked. They're banked at 0.2.
All right. Does anybody else have any questions? Well, I think we should wrap it up and give Phil some time. He's been at it for an hour and a half now. So okay, let's wrap this up then. Phil, I want to say thank you very much for coming back on. I mean, you were in this community since almost the very start, when this was just a couple dozen or a dozen people here hanging out, and we really miss you. We really hope that you come back, not just for these kinds of more formal events, but more informally. We really enjoy your company.
You will in the fall. It's been really busy. New baby. I'm also hopefully trying to take a little time off. But that seems unlikely. But nonetheless, yes, you'll see me around more frequently. It's just been really busy lately.
Yeah, no,
as you can imagine.
We understand, and congratulations again on the baby. That's fantastic.
Thank you, sir.
Boy or girl?
Girl.
Oh, you got a name?
Lily.
Yeah. Oh, that's nice.
Beautiful name. Congratulations.
Thank you. Yeah, so it's great. I mean, she's 5 weeks old now, and a little over 5.5. So very exciting.
Congratulations.
Yeah, thanks. All right, guys. Thanks. And like I said, I will pop